Question 13, Michael will start trading on the 1st of August 22, introducing £18,500 of his own cash into the business. And he's provided the following forecast. So starting in August, those are his forecast sales, purchases and operating expenses for August. And then we've got some for September as well. Additional information, 25% of sales will be on a cash basis. So with the remainder, the remainder is going to be 75% of sales are going to be on a 1 month credit basis. So 25% of them are going to be paying in the month that he invoices, and the other 75%, 3/4, are going to pay in the month following. Okay, nobody's getting any cash discount. 60% of purchases will be on a cash basis, and the remainder will be on credit. So 60% of your purchases will be paid for in the month that they're incurred. The other 40%, the remainder, will be paid for in the month following the purchase after taking a 5% early payment discount. Now, a word of warning about these percentages: never be tempted to net one off against the other and just multiply the purchases by 35%. This will not work. The 5% needs to be applied to the 40%. Okay, so purchases for August, for example, are £18,000. So in September, we're going to pay for 40% of those, but of that 40%, we'll get a 5% discount. So please don't knock the 5% off of the whole 18,000. It's just going to be the difference. And then operating expenses will be paid in the month they are incurred. Okay, so let's have a look then. If we can remember the layout, so we're doing it for 2 months, August and September. So let's go for August, let's go for September there. Let's put some pound signs at the top. So we want receipts. Now it says he's going to put capital introduced in. So let's pop that in straight away into August. So £18,500 of his own cash is coming flying in straight away. Sales, if you remember, 25% are on a cash basis. So cash sales is 25% of the current month. So 11,400 is the sales figure for August. 25% of that, so 2,850, are going to pay us, or pay him in August, they're not going to pay us. And then September, the sales are 26,600. 25% of those are on a cash basis, so they will pay that money in September. There's no capital introduced in September. Right, next bit then, we've got the credit sales. So credit sales, 75% are going to pay in the following month. So 75% of August will pay him in September. So 75% of 11,400 times 75%, he's going to receive 8,550 in September. So nothing in August, none of those credit sales will pay him until September. And then in October, he will receive the other 75% of September's sales, but we're not asked to worry about that. So I think that's all the income, so we can total that up. So 18,500 plus 21,350 in income for August, and then September 15,200. Okay, then we want payments. And this really is quite straightforward. They've not told us anything about non-current assets and depreciation. So just a word of warning, if you've got a cash budget, never be tempted to include depreciation. Only if you're trying to find the cash from cash flows, perhaps for a project, that's the only time you need to involve depreciation, because you'll need to add depreciation back to profit to get the cash situation. But in a cash budget, we never want to see depreciation. Non-cash adjustments do not belong in there. Similar things with provision for doubtful debts, we wouldn't include that in there, or irrecoverable debts written off. That's not a cash transaction. Anyway, back to the task in hand, which is this lovely straightforward cash budget. So purchases, again, we're paying for some of them at the time. So we've got cash purchases. So cash is 60%. So in August, he's going to pay for 60% of August's purchases, which is 10,800. 20,200 times 60%, 12,120. He's going to be paying in September. Okay, so that's the cash basis. The remainder, 40%, are on credit. Trade payables will be paid in the month following purchase. So this remainder of 40% after taking 5% early payment discount. So credit, which is the 40%, he's not going to pay any of that in August. But in September, he's going to be paying 40% of August's purchases. So 40% of that, which is 7,200. Let's just do that again. 18,000 times 40% is 7,200. But he's going to get a 5% early payment discount. So we can take that away. 5% means 360 coming off. So he's only actually going to pay 6,840. So please just make sure you deal with the 40% and then take 5% off of the 40%, not 35% of the whole lot. Believe me, it won't work. The only other expense we've got is operating expenses. And it says that they're going to be paid in the month in which they're incurred. So 1,100 in August, 1,200 in September. The only other thing you might have to take into account here is things like drawings, maybe loan interest. We haven't got either of those things here. Drawings are usually related back to the sales figure, so the owner of the business will normally take a percentage. Make sure you go back to the original sales figure, not to the receipts. And then loan interest, often there'll be a loan in these cash budgets. But just remember, when you calculate the interest, you'll be given the interest rate per annum. Do not charge a whole year's worth of interest in 1 month. Okay, so that's just a couple of reminders of things that do not apply to this question, but are regular features in your average cash budget question. So just going to add up the total payments now for each month. So 11,900 in August, and let's see what I've got here, 20,160 in September. So the way I like to do the cash flows is then to work out the net cash flow. So that's just simply a case of starting with the money received, taking away the money paid out. So we've got a net cash flow of 9,450 in August. September we received 15,200, but we're paying out 20,160. So there's actually a negative cash flow of 4,960. So we'll put that in brackets. Then we add the opening balance. Now in this case, for August it's 0, but we can then work out the closing balance. So in this case, it's going to be 9,450, and then that becomes the opening balance in the following month. So 4,960 is the net cash flow for September, but we've got 9,450 positive bank balance brought forward at the start, so we end up with £4,490 at the end of September. Okay, so hopefully that explains that nice little cash budget question. 8 marks in the bag, very straightforward. Thanks very much for watching.